Hello everyone and welcome to GPA Trading Services special guest webinar. We are so thrilled you could join us. Let me formally introduce myself. I am Trish Albrecht. This is a photo of Gary and I. We are your hosts for today and the founders of GPA Trading Service. We traveled a good bit this summer, and part of our travels we were on the beautiful island of Maui, and this is Gary and I enjoying a beautiful sunset. They have the most gorgeous sunsets. So this was a recent photo taken of us over the summer. I thought I'd share that and reintroduce ourselves. And now I'll move forward and introduce you to our guest speaker. We're very pleased to have Thomas Wood with us today. Thomas is with Value Charts, and Thomas has been an active trader and investor for the past 8 years. He personally trades in various markets including forex, futures, and equities. He's an active teacher and student of the markets through continuing to learn new trading strategies and utilizing the latest technical indicators. He has become a profitable day and swing trader. He's the director of Value Charts Futures Live Trading Room and one of the youngest hedge fund managers in the industry. He also holds degrees in economics, finance, and marketing, and also developed the Momentum Trender Indicator that he's going to discuss with you today. Now, before we pass it over to Thomas, we have a very important disclaimer. As you all know, trading involves risk. Therefore, please do not trade with money you cannot afford to lose. Always adhere to proper money management. And all information provided by GPA Trading Services and our guest speakers is for your educational purposes. So without further ado, we're going to turn it over to Thomas, and he's going to walk you through his presentation. So thank you again for joining us, and please enjoy.
Thanks, Trish. Just want to do a really quick sound check. Can everyone hear me okay? All right, can everybody see my screen? Can everybody see my screen? It should say Smart Setup, Smart Indicators to help you trade. All right, good deal. Again, thanks again, Trish, for the introduction. For those of you that didn't hear it, my name is Thomas Wood. I'm the Director of Trading Operations over at ValueCharts.com, also the President of Sapiro Capital, and I'm Managing Partner there. And we're going to go ahead and get started with Smart Setups, with the indicator Smart Setups Momentum Trender, which is just a really awesome indicator that we created really to help people in the trading room do better with knowing when to get in and get out. Now, the whole idea behind this, actually before we get started, let me go over a quick risk disclaimer. Trading or investing carries a high level of risk and is not suitable for all persons. Before deciding to trade or invest, you should carefully consider your investment objectives, level of experience, and ability to tolerate risk. This content is subject to change at any time without notice and is provided for the sole purpose of education and assistance in making independent investment decisions. SmartSetups.com has taken reasonable measures to ensure the accuracy of the information contained herein. However, SmartSetups.com does not guarantee its accuracy. It's not liable for any loss or damage which may result directly or indirectly from such content or from an inability to access such information or any delay in or failure of the transmission or the receipt of any instruction or notification in connection therewith. Any past performance results are shown for illustration example only, are hypothetical, and as such have many inherent limitations. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Past performance is not necessarily indicative of future results. Everybody's asking for it to be a little bit louder, so is that any better? Then along those same lines, we're required to show you CFTC Rule 4.41, just basically saying hypothetical disclaimer. It's easy for us to go back and say, look, this happened in the past, this happened here, happened there. There's no guarantee it's going to happen in the future. I'm not going to go through this whole thing, but if you are interested in reading those disclaimers, send an email into support@valuecharts.com or support@smartsetups.com. We'll get you a copy of them. Now, when we were coming up with the idea for the momentum trender, we wanted a really easy way to determine the direction of the momentum in a market. So we wanted to be able to take advantage of intraday and end-of-day momentum trends because, as you know, throughout the day you'll see a market really start to move very strongly in one direction or the other, and then it'll kind of peter out and slow down and go back to neutral. So we wanted a way to easily identify this, especially for the people that are in our trading rooms and that are members of our trading rooms, because they would look at it and say, okay, this market should go down. But they would go, okay, well, it should go down, but when do I get short and when do I get out? Well, we came up with a way with this indicator to help you identify when you get in and when you get out, when these markets are changing. It easily identifies it. The way it identifies it is it's going to paint a price bar, green for bullish, blue for neutral, or red for bearish. Now, the way you use it, again, you can simply be buying or selling green bars and then selling on red, stop and reverse. Now, there's people that do that every day in the trading room and with us that they make money doing that. Now, the one thing I will say about this is it's not for people with smaller accounts, because if you're doing that, you're going to have some periods of drawdown that you have to be able to suffer through in order to catch the bigger move to make up for all the losses. Now, if you're like me, you look at that and you go, okay, well, I don't want to be doing that. I would like to improve it. I don't want to just be buying or selling green and red because it gets chopped up too much. So then you come up with ways of using confluence with other indicators. Things like following the agreement between the MQ trend and the momentum trender, or the MQ regression and the momentum trender, or getting a directional bias, meaning you're going, okay, I think this market should be going higher, so I'm only going to take longs, or I think this market should be going lower, so I'm only going to take shorts. And that's really one of the best ways of doing it, and one of the ways that we do it in the trading room every day is we say, okay, we have a bearish setup, so I think this market's getting ready to head lower, so then we'll wait for it to change. Once it changes, we'll jump in and catch the trend to the downside. Now, this is what a normal price chart looks like. As you all know, this is Apple, AAPL. I'm about to show you what the indicator looks like. This is Apple on a 500 tick chart. Now, looking at this, you can see you have up moves, you have down moves, you have up moves. And there's ways, of course there's ways by just looking at a price chart to say, okay, there's breakout patterns you can trade. There's reversals, there's divergences, things you can look at. But really, when you look at this, let's say you were able to get long. Let's say you got long right about here. So you went long Apple on this breakout from the consolidation. You say, okay, I'm long. Well, how do you know when this is just a normal pullback or when it's a reversal, or this is just a pullback or a reversal, or a pullback or a reversal? When do you know when you're supposed to exit that trade or when you're supposed to get in that trade? Well, when you apply the momentum trender, this is what it looks like. Now, this is the same Apple chart. This is Apple, AAPL. This is with a 75 EMO period, which EMO stands for exponential momentum. This is the same 500 tick chart. Now you can see if you were trading it the simplest way, in the simplest form of using the momentum trender, it's selling red and then buying green, and then selling red and then buying green and then selling red. So you would have had a very small losing trade, a break-even trade, a nice winning trade, and a really nice winning trade. And the great thing about it is what this indicator does is it helps you to know, hey, it's staying green, so I stay in this. This is just normal consolidation. Same thing here. It goes up, pulls back. It says, hey, it's still green. Stay in it. Just normal consolidation. Now, what it's not going to do is it's not going to get you out right at the top. It's not going to get you in right at the bottom. But what it's going to do is it's going to take out that middle 80%. 80%, because that's where the money's at, okay? Picking tops and bottoms, much harder to do, and really a good way to lose money. But taking out that middle 80% is a good way of consistently making money in the markets. Now, how do you use this? So again, you can use it on time-based charts, you can use it on tick charts or range charts, you can use it end of day for swing trades or for position trades. You can do longer term or shorter term. You can use tick charts for day trades. You can use range bars. If a market gets really choppy like this, so a market is going sideways, let's say, no trending indicator is going to do very well in a choppy sideways market. However, if you change it to a range bar so that the market actually has to move a certain distance before breaking out, then it'll do a much better job of filtering out that chop. Now, the other thing, like I said, simplicity equals profitability. So one of the great things about the momentum trender is you go out and you look at all these indicators that people offer, and I'm not saying anything's bad or anything's good. There's a million different ways to trade the markets and make money in the markets. But if you're like me, you look at it and you go, wow, there's 20 different settings there, and really nobody knows what those settings are supposed to do except for the person that created the indicator. Well, the thing with the momentum trender that's so good about it is there's only one setting. You change the EMO period, okay? And if you're like me, we set it to 50 in the trading room and we don't touch it unless it's on a daily price chart, and then we set it to 25. Now, the thing is with this as well, I don't want anybody to sit here and think I'm going to be cherry picking when I show you examples of how this works and how you can trade using this indicator. So what I normally do when I do this type of webinar and show people what it does, I wait until the end. I'll do about half the webinar of explaining what it is and how you trade it and showing you results from trading it. And then I'll pull up a a TradeStation, and I'll show you any market you want to look at. Okay, you want to look at Apple, look at Apple. You want to look at gold, we'll look at gold, and you'll be able to see just how well it works. So it speaks for itself. The results speak for themselves. When you see those, you'll understand what I mean and how this helps you. That's why I really like it. Is because it's simple and it basically sells itself. Now that being said, if you don't want it, I'm not going to sit here. I'm not a high pressure salesman or anything like that. So if you don't want it, by all means, don't buy it or anything like that. So again, in the simplest form of using the momentum trender, you are buying green and selling red. So you sold here and then you covered here. So you had a small loss. And then you bought here and then you covered here. So you had a break-even trade. And then you sold here and you covered here. You had a nice gain to Apple on the downside. And then you bought here and you held it all the way till the end. Now, as I mentioned, buying and selling, just the color changes, just buying green and selling red, you got to have the ability in your account to suffer through smaller drawdowns, like a loss here and then a loss here or a break even here, before you catch that big move, and it makes up for everything and some. As I said, there's people in trading who do this every day. They sit there and they trade the color changes, and that's fine. But I want to make sure you understand, if you have a smaller account, you don't want to do that necessarily, because it's going to chop you up a little bit, so you may not be able to suffer through the drawdowns as easily. Now that being said, it is profitable in the long run. So one thing that happens with a lot of traders out there is they get a new idea, they get a new way of trading, okay, and they go, this looks great, I'm going to do this, I'm going to go hard all the way through. They use it for a week, they have a down week, and they go, wow, this is terrible, I'm never using it again. Well, the problem is trading, nothing's going to be right 100% of the time. So maybe they got in on a down week, or maybe they take 2 or 3 trades. So let's say they take 2 trades and they're both losing trades. They go, okay, it's not going to work at all. Well, that's not necessarily true. You can't judge an entire strategy from 1 or 2 trades. All right, so it's a long-run profitability thing, which is basically how all trading is. It's all about being profitable in the long run. So here's another example. This is gold. GC on a 500 tick chart. This was back when I made this. This was a couple months ago. This was in the trading room. We were actually bullish gold at the time. Now we've been bearish gold now for the past since Thursday of last week on a retest of a broken trend line on the dailies. But we were bullish at the time. So remember how I said you have directional bias. So if you're bullish in market, you're only taking long signals. So what do? You buy when it turns green. And then you sit back in your chair and you wait until it turns red. Well, it doesn't turn red until the next, waits 24 hours basically. Then changes to red. So you have this trade here, which is about $3,500 a contract. All right, so not a bad trade at all. And again, all you had to do, this is the great thing about it, is it's simple. So you go, okay, I'm bullish, it turns green, I take the long, I hold it until it moves, and then I get out when it turns red. So it takes all the human emotion out of the trading, which is one of the things that a lot of people struggle with, is they struggle with, I have so much profits, I want to get out of it. I want to keep those profits. Well, if you took $200 or $300 contract profit way down here, the next day when you see it's still way up there and you're up $3,000 some dollars a contract and it's still green, you're going, wow, what was I thinking? Well, that's where this comes in handy, is because it keeps you on the right side of the market. Now, again, if you're like me, you look at that and you go, okay, just buying and selling green and red, that's all well and good, but I want to improve it. I want to do better than what that is doing. That's where you can use confluence with other indicators. So this is Tesla. This is Tesla on a 30-minute chart. And this is using the MQ regression indicator with a 14 length and a 75 EMO period on your MQ momentum or SS momentum trender. Now, what I mean by confluence, that means when 2 things agree or work with each other. So in this case, you're looking at the MQ regression, which is the red and green line. Red means sell, green means buy. That's all it means. You don't pay attention to the location. It's not a moving average or anything. So when you're green and green, you buy. So right here, as of right here, you're green and green, so you buy. And then you hold it until you're red and green, which is right here. So red and green, you're out. So you have a nice winning trade there. And now you're red and green here, so you stay out of it until you're green and green again. You're green and green again as of this bar right here. So you buy on this bar. You hold it until you're red and green on that bar. Wait, green and green you buy, red and green up here, whenever this rolls over, you sell. So what this does is it's not going to keep you in through these big pullbacks. It's going to get you out a little bit sooner, but it adds an additional filter to make sure you're on the right side of the market. so that you're not selling on something like this. So you're not selling just because it's red, because you have green here. So green and red you don't touch. Red and red you sell, green and green you buy. Again, here's another example of this. This is RBOB. For those of you that don't know what RBOB is, because I find a lot of people that don't, RBOB is unleaded gasoline futures, New York Harbor blend stock, so 150 tick. Now, I personally like using ticks a lot because it shows you more than what a time-based chart will show you, but some people don't. It just depends on how you want to use it. But again, same idea, same strategy. So green and green you buy, red and green you sell. Green and green you buy, red and green you sell. Green and green you buy, red and green you sell. Green and green, red and green, green and green, red and green, and then red and red. So you sell, and then you cover when you go green and red. So you see here, you have in this little series, you have 1, 2, 3, 4, 5, 6 winning trades in a row, all for a couple $100 at a time. Now again, you may be looking at this and you're going, okay, well that's not really for me. I'm on a day trade. Well, let me show you some of the results. Now I'm not going to say that you have to day trade. I'll show you some swing trading as well. But before I decided that I would actually take this and let people potentially buy it instead of just using it internally, I wanted to make sure that other people actually could use it. I want to make sure other people could benefit from it because I don't want to sell something that's not going to help you trading. If you're in my trading room, you know that I'm not that type of person. So what I did with this is I gave it actually to my father. This is my dad, Barry Wood. I said, okay, this is how this works. I said, this is how you identify longs and shorts. This is how you enter and you exit. And I said, record your results and send them to me. I want to know that it actually works. So he has a $20,000 account, and he would decide to go trade this. These were his results from June 11th to June 19th. This is what he sent me in his spreadsheet showing the trades that he took. I used the momentum trender and the MQ regression indicator on a 150 tick chart, trading 1 to 2 contracts per trade. Now he was trading futures. He was trading soybeans. He was trading the Russell. He was trading crude oil, and he was trading RBOB. All right, so those are the 4 markets he was trading. And I'll show you in just a minute exactly what he was doing to identify when to get in and when to get out. But on 6/11, he had 25 trades. Again, he's just day trading. 19 wins, 5 losses, total gain of 4,782. On 6/12, he had 20 trades, 13 wins, 7 losses, total gain 2111. 6/15, 16 trades, 11 wins, 4 losses, total gain 1120. 6/16, 25 trades, 15 wins, 10 losses, total gain 632. 6/17, 22 trades, 13 wins, 9 losses, total gain 3338. 6/18, 19 trades, 15 wins, 4 losses, total gain 2449. 6/19, 14 trades, 9 wins, 5 losses, total gain 627. 7-day total, he was up 15,059 over that 7-day period. Now again, that's a lot of trades. He was trading it intraday, and I'll show you exactly what he was doing. He was using a 150 tick chart, so all his trades were based off a 150 tick chart. He was looking for intraday consolidation breakouts. So he was looking for a tick chart that would enter into a pennant, or it would enter into a channel. He was looking for an intraday consolidation pattern, and then looking for a breakout that was confirmed by the momentum trender and the MQ regression. So if it was selling, it had to be red regression and red momentum trender. If he was buying, it had to be green regression and green momentum trender. He would take profits. Typically, he was getting out at around plus $200 to $300 per trade per contract, so about anywhere from $400 to $600 per trade. He was limiting his losses to a maximum of $150 per contract, so risking $300 per trade. This is what it looked like. So this is the type of trades he was taking. This is crude oil. This is a 150 tick chart. And this is what he would look for. Okay, here's your descending channel. So you see resistance, 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 all the way down. You draw a parallel, put it on the lows, support, 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 all the way down. So you have a channel. Then you look for the breakout. Well, here's your breakout. Then you look for the confirmation. Green regression, green trender. So green and green. Remember, green plus green equals long. So he had green and green buy, red and green right here, so he's exiting right there. So green and green buy, red and green exit. Stop would be $150 a contract right down there. Here's another example. It's the same thing. This is crude oil. Again, everything's on a 150 tick chart. Crude, 150 tick. Here's your consolidation. Support, you can see 1, 2 times you hit it on support. Resistance, 1, 2 times, 3, 4 times basically you hit resistance. So there's your channel. You look for the breakout. Here's your breakout. Red regression, red trender. So red and red, sell. Remember, red plus red equals sell. So you get in short, and he would hold it until green and red. Green and red, he's exit. Red and red again, he sells it short one more time. Green and red, he exits. So you see what he was doing. He was looking for the consolidation, looking for the breakout that was confirmed by the momentum trender and by the regression, and then he would take the trade. He did not take the trade if it was not confirmed. Here's another example. This is the Russell, so TF, 150 tick chart. And again, here's your pennant pattern. So there's an uptrend line for support. Here's a downtrend line for resistance. So you have a pennant looking for the breakout. Here's your breakout. Red and red, red regression, red momentum trender, you sell. Green and red, you exit. That right there is from about 81.30 is what it looks like, or 80.30 down to about 77.50. So let's say 80.50 to 77.50. You're talking about $300 a contract. So $600 trade right there. And again, it's not taking very long. You just do this over and over again. Then he'd wait for the next consolidation. Here's your next consolidation. Here's your breakout, red and red, sell, green and red, buy. Next consolidation, breakout, green and green, buy, red and greens, cover. You see how that works? So pretty simple. Now, if you're looking at that and you're going, okay, that's all well and good. I don't want to sit in front of my computer all day long. I don't want to be day trading. All right, fine. You don't have to be day trading. You can apply the same logic to end-of-day charts. So this is Apple. This is actually one we called out in the trading room. Here's your pennant in Apple. You see your pennant. Here's your consolidation. Here's your breakout. Green. If regression was up here, it would be green as well. I'll show you that later. I'm going to pull up real charts or live charts. And you can see green on the breakout. You buy, you hold it until it gets all the way up there. And if you were with me, you know we were holding it, looking for it to get all the way back up to retest the 100 level. Another example, if you just want to be catching the trend, so let's say you don't even want to be looking for consolidation, you can do trend following, selling red, buying green. You may get chopped up a little bit like this. Sorry about that. The internet actually at the office went out earlier today, and I had to come home to do this, and he's in the living room barking at his reflection. But you can, again, look for consolidation breakouts here as well. Now, you can apply the same logic end of day to futures markets if you want to do that. Again, looking for longs and shorts, just trading the trends. So buying green, selling red, buying green, selling red, all the way up. Now, this is what I was talking about when I say somebody, they'll trade it, they'll take one trade or two trades, and they are down. So they're losing. So they go, it doesn't work at all. Well, they took this short here, which was a losing trade, and they took this short here, which was a losing trade. And then they missed out on any other profitable trades because they only wanted to go short and they didn't want to give it enough time to run. So don't ever be too quick to judge when you're only trading one time. The other thing I normally tell people to do is I say go trade something simulated first. Learn simulated so you don't waste money trying to learn something new with a live account. That's not a good idea. So my preferred settings for this. I use an EMO period of 50. But you can use between a 50 and 100 depending on the length of the trend you're trying to catch. Use an MQ regression setting between 25 and 50. Now, if I'm doing a daily price chart, so daily charts equals a 25 EMO. Again, there's only one setting, one to keep it simple, one to make it so people that are trading don't have to pay attention to that much, don't have to really learn 50 different settings. Again, regression, you're using between a 25 and 50. If you want to stay in longer term, if you want to get in and out really quick, using the agreement between the two, you're looking for a move, or you're looking to use a setting of 14. Now, tick charts, I'm a big fan of tick charts. I always have up a 150. Sorry about that. I always have up a 150, 250, 500, and 1,000 tick chart. If you're using minute charts, you don't want to use ticks, that's fine. You can use 2, 3, 5, 15, 30, 240, 120, etc. If you want to go to end of day for swings or position trades, you can use daily price charts. Now again, I don't want you to think that, okay, that's great. He showed his dad how to do it. His dad did really good. Nobody else did, because that's not true. Here's just some of the feedback we have, and again, we have tons more. But this is from EJ, another $1,100 day today for a 4-day total of plus 4,625. Thank you for the indicator. I have every confidence that it will be a do not trade without it indicator. This is from Louisa. And I apologize if I'm going really fast, by the way. I want to get to where I can show you the live charts, because that's where it matters. Okay, anybody can come back and say, look at this time right here that it worked really well. Look at this time right here that it worked really well. I'll pull up whatever market you want to see. Okay, so that's what I'm trying to get through this. That's my favorite part, because I can say, look, it works. Excellent. Today's action, taking all the signals on offer, would have yielded 173 plus 295 ticks, i.e. $4,680, excluding commissions and slippage. I'm obviously impressed with the way the momentum trender has worked out so far, from Richard W. And again, as I said before, one of the best ways to use it is to stay on the right side of the market, and that's what this whole paragraph here is about. He talks about how it helps him stay on the right side of the market. Love the momentum trender. Nice $800 in 45 minutes. This is from Elizabeth Jessen. Oh, whoops, I apologize. I wasn't supposed to say her name. This you can see right here, love momentum trender, but really confused in the settings. Nice $800 in 45 minutes. So you can see here, what she was looking at doing was, it went from red to blue, so she was looking at it changing, and then she bought on blue, covered when you had the rally. Here's another example of some trades from other people that they. Again, I don't trade equities, so you see all these examples of equities. It's not me trading. I don't trade equities very often. That being said, I have puts. I have a few puts in the SPY right now. Just full disclosure, but yeah, I don't typically trade equities. Friday plus $279, Monday plus $25.60, total for 2 days plus $2,839. Great success with the momentum trender, even with late entry and premature exit. Here's another example from that same individual. This is using, again, this is Loco. Green, so again, green is buy, so she's just buying it every time it's green. Every time it rallies, she closes it. And she didn't trade over here. And then red, that would have technically been a sell, which actually would have worked out really well because it moved down. DGLY, this is from another individual. What's not to like about the momentum trender and the NQ regression? 2 trades equals $696, round up to $700. And for the 3.5 hours I played this morning, that's $200 an hour. Great money for this senior. Notice I did not get all the meat off the bone, but still did well. And again, what this individual is doing, green regression, green trender, buy, sell every time it rallied. This is another individual. They sent in this was that person who was trading Loco. They sent in their brokerage statement, and you can see the first day they had $1,134 in profit, and then over the following 23 trades, they were up $11,127. Like I said, I covered up her account number, but you can see it. All right, you can see it. This is what she's doing. She's trading the trender. This is another individual sent me their equity curve. Now, all honesty, this is not to be expected. I don't want to overhype this at all. This individual was very, very fortunate in how they were trading. They ended up having a series of winning trades without losing anything. And you can see this is what their equity curve looked like. And that was, again, using the momentum trender. Again, I'll take questions as soon as we start pulling up the markets. So today, if you're interested in the trender, this is what we are doing for the first 25 people today. If you go to valuecharts.trading.com/MT-special, you can get the momentum trender indicator. Now, all day long on smartsteps.com, we sell this indicator for $1,000. We're not doing that today. Again, we have a deal for the first 25 people. After that, sorry, but we don't want to give it all away. You'll get the momentum trender indicator. You'll get a pre-recorded workshop. So we already did the workshop live, but you'll get the recording from that workshop for how to use the momentum trender. It's an entire workshop of 2 or 3 hours long on exactly how you use it, when you get in, where you get out, where your stops are placed, etc. You also have 1 week of live trading with me, so you can come into the trading room with me for a week and see how we trade and see us do it live. And I'll show you some of the trades we traded today. Normally that's about $1,300. Today only, for the next few hours, for the first 25 people, it's only $497. Again, you're getting more than half off for all of that. $497 for everything. Again, valuechartstrading.com/MT-special. Now, let's go ahead and look at some live charts. Here we have the dailies on the left. We're using a 25 EMO and a 50 regression. We have a 250 tick chart in the upper right using a 50 regression and a 50 EMO. We have a 3-minute chart in the bottom right using a 50 regression and a 50 EMO. Okay, this is what it looks like. This is, for example, this is a trade we took today in the Russell. Now, we were actually using a 150 tick chart to enter the Russell this morning in the trading room. Again, we did this in front of hundreds of people, so you can verify it if you want. But we were looking at the Russell and we said, okay, the Russell should be going down. So we had the directional bias on the Russell. We said it should be going down. We were looking for it to move lower. What we did is we said, here's our support. Our support was at 1179. We said it'll break below support, confirmed by regression and trender, is a sell. Remember, red and red don't break through resistance or support. So you had a red regression, red trender, you broke through support, you sell. That moved all the way down until it changed to green right at 73.40. Okay, so you're in it from, call it 78.90, 79 area. You're out at 73.5. That's about $500 a contract worth of a down move there, a little bit more than that. So not a bad trade at all. Now, again, that was one we took live. You can see this is what it looks like. Green, green's buy, red and green sell. Pretty simple. Again, 250 daily and 3-minute. Now let me answer some questions. You can tell from the bark that was no dog. Yeah, he's actually, his name's Merlin. He's only 3 months old, I think. What platforms does it work on? We are on TradeStation, Multicharts, NinjaTrader, Sierra Charts, TOS. We're not on MT4 yet. We're working on getting on MT4. It's being developed. Here's the link again, valuechartstrading.com/MT-special. EMO is exponential movement of what? It's changing what the way the indicator works is it looks at the relation of the highs and lows of a price bar, the relation of the movement of the bar in relation to a couple different exponential moving averages, where the highs and the lows were in relation to those moving averages, and then it calculates. So that being said, another thing I got to mention is it lags by 1 bar. So you see how this first bar is green here? You ignore that. You go off of 1 bar prior. Again, what platforms? TradeStation, NinjaTrader, Sierra Charts, so Infinity, Thinkorswim, eSignal, Multicharts. We're not on MT4 yet. Answer the question by reading the screen. TradeStation is mine. That's what you're using. Sorry, not a problem. Do I trade EMD futures? No, I do not. Now, this is where it gets more fun. So what markets would you like me to look up? I'll be more than happy to pull up whatever market you want to see. If you want to see certain things, just let me know. EMD, Western Asset Income. It's a really cheap market with very little volume. So be careful with that. You can see the number of ticks is very low. You want to see the S&P at ES. Now, one thing I'll say about the S&P, you don't want to be using the 250 tick. It's a little bit too short for that. Your 3-minute doesn't look bad, though. Normally, we use a 500 or a 1,000 tick in the S&P. We can pull up things like gold, crude oil, RBOB. Actually, if you were a member, every Monday night, we do a weekly outlook session where we go through on Monday night at 8 p.m. Eastern, and we say, okay, this is where we think these markets are going today or the week ahead. And last night, I mean, not to brag, but last night I was very, very pleased because we said heating oil and RBOB were going lower. We said gold was going lower. We said the yen was going lower. We said the indices should pull back as well. And all of those just killed it. We had huge moves in all these markets today. The S&P was up, but most of the day it was down. How do you trade it? You follow the momentum trender. We were shorting today. Like I said, we were shorting the S&P and the Russell. Here's the S&P. Again, red and red, you sell. Green and red, you buy. So you sell here, you buy right here. You sell here, you buy right here. Pretty simple how it works. CME group. CME group, this is what it looks like. Here's your dailies. It doesn't look bad. Here's your breakout. So again, here's your consolidation. You look for your daily consolidation. Look for your breakout. Look at that resistance there. 1, 2, 3 times right up against it. You finally break out, green and green, you buy. Look at the nice rally. All the way up, and it would still have you long, even through this pullback here. Intraday, this is what your 3-minute chart looked like. Not bad. Not bad. LNKD. This is LinkedIn. Hey, that looks really good to me. It had you long all morning, and then it said, okay, time to get out, and then it sold off and had you short all afternoon. Looks good to me. I mean, look at your daily. Look at the run you've had on the dailies. Do we have to change any settings? Nope, I'm not changing any settings at all. You can see this is a 250 tick, 3-minute chart. Both of them have 50 EMO period and 50 regression, and then the dailies are on the left. That has a 25 EMO period and a 50 regression. I mean, look, it's sell here and then hold it all the way down until here, and then buy, cover, sell, reverse, buy. Do you have to change any settings? Sorry, EMD index futures, not equities. What's the symbol on TradeStation? Let's look at Apple. Again, if you have any markets you want me to pull up, I'd be more than happy to pull them up for you. More than happy to show you. Again, I don't want anybody to think I'm sitting here cherry picking. That's one of the things that I don't agree with is when people do a presentation and they say, look, it worked here and here and here. I'll show you whatever you want to see. That looks good to me. I mean, look at that daily up move. Again, this was that breakout, so you held it all the way up until here, and then it quickly reversed and went green again and held it all the way up to the highs. We don't have, nobody's manning the phones right now. If you have questions, send an email into support@valuecharts.com. They'd be more than happy to help you. Again, the link is valuechartstrading.com/MT-special, only for the first 25 people today, BRUDD. I don't have data for that. I apologize. You want to see the S&P E-mini. This is the S&P E-mini. British pound, US dollar, GBP, USD. That looks really good to me. I mean, look at the trend that you've been in on the dailies. Down, so then all you do is take sell signals. Well, that looks wonderful, in my opinion. Does that not look good? That had you short from, if you're just following trender, you're in 65.8, now at 64.6. Not bad. Here's the euro dollar. You want to see euro dollar? It works forex, futures, equities, anything you want to see. You want to see crude oil at CL. Again, crude oil had a huge down move today. So did RBOB. So did heating oil. And you can see crude oil. Look at it go. Look at your 3-minute chart. So that had you short from. Your entry was at 95.70. Your exit was at 93.15. Who would not want that? I mean, that's a great trade. We can look at RBOB and heating oil as well. The dollar yen. Yeah, again, it's kind of funny because yesterday we were bearish the dollar yen. So it was a sell yesterday. Same with RBOB, same with heating oil. And you can see what happened. RBOB just fell to the floor. It's been red all day long on the trender. Dollar yen. There's your dollar yen. That doesn't look bad to me. Looks pretty good. Again, we were bearish the yen futures today, so bullish the dollar yen. Sorry if that was confusing to anybody, but that looks really good in my opinion as well. You want to see the euro futures contract works out really well. Again, if there's no other questions, then I mean I'll be more than happy to pull up any other markets. But if nobody else has any markets they want to see, that's basically it. Again, if you're interested in it, yeah. Using both indicators in your instructions, I think it will work on a smaller account as well. There's actually an individual I just did a consultation with 2 weeks ago. He had a $2,500 account and he wanted to trade futures. I said, okay. So we put together a game plan, put together a trading plan for him using the indicators, and said, these are the setups you're going to trade. This is how you're going to do it. And his account's now worth like $3,500 or so. So he's up $1,000 in a week and a half. Not bad. NKD at NK. Are you talking about Nikkei? Nikkei looks good to me. Time-based charts not going to work so much because it's normally traded in the Asian session, but your tick charts look like they work really well. TBT going down tonight. I don't know. I don't trade TBT. Euro pound. Here's euro pound. Again, you would have been long since all the way down here, all day long. Again, that looks really good. I find it so funny because I created it, and it still amazes me that it works so well sometimes. I mean, that's just excellent, excellent, excellent. Silver. There's a silver. If you were in the webinar with us last night, you know we were bearish silver, and that worked out really well too. All right, Trish, I think that's it. It doesn't seem like there's very many more people asking questions. So I want to thank everybody for coming. Thank you for having me. Hopefully you like it. If you don't like it, again, I'm not the type of person that's going to say you need to go buy this, because you don't have to. There's a million ways to trade the markets. If this looks like something that'll help you, if you find yourself always on the wrong side of the market, you want something simple, this is simple. Great British Pound, Japanese Yen, there you go. I'll look at a couple other popular ones, things like Tesla. Tesla, look at it go. I mean, look at the daily uptrend, and look at it all day today. Google. We're looking at having on MT4 in the next couple of weeks. Speaking of your consolidation periods, so you look at your daily, here's your consolidation. You see where you're at right now in Google? So you look for the breakout confirmed by the trender and the regression. So you want to see it, if it's going to break out to the upside, it would have to break through here, and then you want to see it turn green and green, and then you buy. Simple. Why are you using the daily? Just because a lot of people like doing swing trades. So I'm showing the daily. I personally use tick charts. I find setups, and then I trade in the direction of my outlook. So I get a directional bias, whether I'm bullish or bearish, and then I trade in the direction of the setup. Amazon, this is Amazon. Again, I'm not cherry picking. You can see all of them. You can see how they work. And pound Japanese yen up. What about it? The dailies are bullish. The daily is bullish, but you be very careful because you just had a shooting star today, which actually suggests it goes down. So the way you do that is, if you're trying to go for the bullish swing, then you're looking for an up move, but you don't want to ignore all the other. What made you choose the 3-minute chart? 3 minutes is just a good average to use if you're looking for time-based charts. A lot of people don't like using tick charts. Depending on the market you're trading, tick charts will a lot of times have more volume or more bars generated than your time-based chart, because time-based chart generates a price bar every time certain amount of time goes by. A tick chart generates a price bar every time a number of ticks has happened. Apple, this is Apple. It doesn't look bad. Sorry, I'm starting to lose my voice. CMG, Chipotle. Chipotle's just been consolidating here recently, but I mean, look at your 3-minute chart. Look how well it did today. I mean, that's really good. So, all right, that's about it for me for today. Just to recap, for the first 25 people, you get the trender, you get the workshop, you get a week of trading with me, so you can come in and see us do it live, see how we use it. It's only $4.97. Make an investment in your trading if you think it's going to help you. If you don't, hey, don't get it. There is a 30-day money-back guarantee, so if you get it, you use it for 30 days or use it for 29 days. You say, you know what, this isn't for me. It's not working how I think it's going to work, or it's not the way I want to use it. Fine, we'll give you money back. Like I said, I don't want to be a high-pressure salesman or anything like that, so there you have it. There's the offer if you want it. I'd love to have you in the trading room. Would love to have you using the indicator. Would love to see your results. It's always fun for that to happen. So, Trish, I guess I hand it back over to you. The link is valuechartstrading.com/MT-special. So again, thank you everybody for coming, and that is it for me here. If you have any questions or concerns, email support@valuecharts.com. Support@valuecharts.com.
Great. Thank you so much, Thomas. And the link is posted within the chat for those of you that are interested. And we appreciate your time and attention in today's webinar. I hope you enjoyed the presentation and take advantage of Thomas's offer. Thank you again, Thomas, for sharing your knowledge and information with us. We appreciate your time today. Okay, everyone, I guess that is the conclusion. We will look forward to seeing you next time. So take care.